This one so we can recap. Oh, Sandil is still up. I thought, hey. Yeah, okay. So this is okay. Same zone of the dollar, and let's go to H4, and there were a lot of orders. Yeah, okay, it's coming through. Okay, see, a lot of orders. People are convinced all the dollar. The trend is up. If you also understand these are railroad tracks in terms of trading, these are railroad tracks. Okay. So after this huge drop, what happened? The market started, price continued the drop, and now at the demand zone. I always like, traders who want to, you can trade, doesn't go as much, but sometimes it pays, to be a sniper. It pays to be a sniper. So you put your orders or your pending orders on those shadows. These are the shadows, or the some people call it pins, some people call it wicks. So you put your annual order. I'm gonna say you select here pending order. So you take this line, I'm just gonna show you what I mean. So this line here, and it would be there at right at the shadow of a pin, or at the not at the shadow of the pin, the pins of the candlesticks. Okay, the pins of the candlesticks. All right, I think it's okay. Okay, the question was on the Fibonacci. Okay, let's just first break it down because before we go over the chart, Fibonacci. What are the Fibonacci retracement level? Obviously, Fibonacci retracement levels are horizontal line where support on resistance, supply, demand are likely to occur. Obviously, they are based on Fibonacci numbers. People study statistics, they know these numbers. They can calculate them. Each level is associated with a percentage. A percentage is how much of a prior move the price has a retrace. Okay, the Fibonacci 38.2% and 61% is also 50% level. So this indicator is useful because it can be drawn between any two significant points, such as a high and a low. The indicators, while you're drawing that, it will highlight, the percentage drop. For example, let's suppose the price rises to 10 rand and then drops to 2 rand 36. Okay. In this case, it has retraced 23.6%, which is a Fibonacci. So in this, the way in terms of the strategy, we improve zone, shadow zone, the mini trend zone to look for liquidity before it goes ahead and before it can change the previous trends. Okay, zone Fibonacci. The one that I like to use is your and 61. The levels on this, obviously, that I use in our entry in our strategy is your 5 levels, 3.850 and 61.8. Okay, these are not there. 6.8 are not there, so you need to add them on your Fibonacci entry. This is there already midpoint. Okay, a midpoint or trade after a long period of continuation. At this point, big traders will find this level because in this zone they are back to the original trend, okay? Especially when the zone is still fresh. When we talk about the fresh zone, that's shine, okay? And then um and then another zone that is very important, the 5, the 16, the level. This level need to be added manually. So you not find it there. So what you see in those levels is your Quasimodo, your head and shoulders, your double or triple top. And it's very easy for this zone, especially if you are entering. They give very nice entry, okay? So the way you do a Fibonacci, if the market is in a downtrend, you pull the Fibo from high to low. If the market is in the bullish, you pull from low to high trend. Okay, I'm just going to show that in terms of the charts. Okay, how you use the Fibonacci to get nice entries. Okay, I'm going to show you that. Okay, this is what DXY. Okay, let's check. Okay, by looking at this, what in terms of what is being taught, what is a trend of DXY? Please share your answer on the chat box. Looking at this, okay. So, what is a trend? So this here is your Fibonacci, okay. So what I do is at the entries of the Fibonacci shoulders, you get your Quasimodo, you get a double top. So I mark these levels. See, like to do that. Or you can take this level, for the price from that level and then made a retrace to that level. So we can take those two levels, okay? Let's see some answers, okay? Which was making lower lows, downtrend, okay, perfect. So lower lows, okay? So when you talk about lower lows, is that there was this low and then created another low, so the market has been dropping, okay? So significance is so we can see this market. So if the market has been dropping, what's going to happen with the Fibonacci? We need to measure actually here. We want to see what do you want to measure? The low. So from the high to the low. Okay. You draw from there because this market is moving down. We take it from the high, we take it from the high to the low, from the high to the low. Okay, we put it there. Okay. And you can see level in the 61.8. This is where you're more likely to see patterns like your head and shoulder forming. Head and shoulder, more likely to form here. Okay. Head and shoulder is more likely to form here. Okay. Head and shoulder, more likely to form here. 5 level 61.8. Okay. So we've said before, these are the price has dropped. So let's just delete that line. So the price has been dropping. Okay, after dropping, what happened? And if you mark that zone, this zone is clearly is there already on your Fibonacci. Originally, it's going to be there. The 50, 61.8 and 50. What does it mean? It means the price has dropped, but it has risen, or rallied by 50%. Or is that at this level, you're more likely going to see something like an M, where the price will drop. This level again, it will rise. Chances are it may rise above that level because this M here, these M's, yeah, you've got traders that have got their stop losses above that level. You've got traders that are trading breakouts. You've got traders that entered their sell when the price was dropping. They've got their stop losses somewhere here. Okay. So the 50 and the 61 level is very important level. Also, because there was this huge drop when the price is to sell, and you can see when the price got to this level, it's an opportunity to sell once more time, and then they were those sell position and they were profitable. Okay. Now I need to show you in terms of adding now level if you do not have them. Especially, let's just go over the Fibonacci. The Fib properties. Okay, so you go to Fibonacci, you click here. You can see these ones are already there. This is not there. Okay, you write this number 618, and this one is already there. The ones that are not there that you need to add. Okay. The one that are not there, you can see. So this is 0.05. When you click add, okay, you click add, you write this number 0.05, and then you write a 5. You click add, okay? Then you click add again, you write 0.11, and then you write 11 in terms of description, and then you click add, okay? And this one again, you write in terms of the level 0.169, and then this side 16.9 in terms of description, then you click add, then you press OK. You'll see those Fibonacci levels are added on your side, okay? If you are in your MT4, you can go through them and try and add them. If you're struggling, just let me know in the chat box. Okay, so these are the numbers 0.169, description 16.9. When you click add, and then this one is 0.05 in terms of a level, and then you click description is 5, then you click add again 0.11, that's a level, and description is 11, then you click add, and then obviously you can play around common style Fibo level, you can make them red, the visualization obviously say show in all time frame, yeah, that's about it in terms of the Fibonacci. Okay. Yeah. Yeah. Okay. I think my Kenzie asked that question, Fibonacci. Struggling SDJPY. Okay. It's not really moving. Similar to this. Okay. You've said before. So the price has moved from that level to that level. So how do we, so if in terms of Fibonacci, do we pull it down? Do we say from up, from this level to this level, from up, down, obviously. So same thing from that level, we can put it to this level because it's a downtrend. Okay, and you can see if you look left, you can see between the 50 and the 50. So move that really And if you look at the left, you can see that this here is a very nice, potentially a zone, a nice space, Somewhere here, you see a very nice space. What I want you to see on this, I wanted this, and then was expected, I expected obviously to come to this level. The 561 point at this level was a very nice level to enter by the chart box. Yeah. I believe so. I also believe so. Yeah. I also believe so. Because there's nothing much happening on USDJPY right now. There's nothing much. Aggressively, but it's been quiet. You can see it, on the previous session. Look at this. Look at this. The market has been moving in a bullish over some time, over some time. Then suddenly what happened? Suddenly this drop. See here, this level is it's a very nice movement. Okay. Just let me know, guys, if you're struggling to, are you struggling with it? Okay. So you can see the SJPY has been moving on there. Suddenly,
Actually,
why does this?
sorry
Because
to
a lot
interrupt,
of
man.
traders believe, yeah, no problem.
Okay, sorry to interrupt. I just have a bit of a hard time grasping the Quasimodo and the head and shoulders and the Pacific zones, and you could continue, but if you could just recap at some point during the explanation, because what you're explaining there right now is quite vital, so I don't want to interrupt you. So I was waiting for an opportunity to ask you just particular zones. You could
I'm really struggling to hear you. I'm not sure whether it's a network on my side or what. Can you please just repeat?
Okay, so what I said earlier, right, is that I haven't fully grasped the concept of the formations at different shadow zones, right? Where it could
Yeah.
be potential entry points from where a rally based drop or a drop based rally
Mm,
would occur, all right? So they get the Quasimodo, they get the different other formations and so on. What I noticed that like at these particular base levels, there's a lot of like half Botmans and most like head and shoulders. So at these particular levels, all right. I fully, completely grasp while you was explaining the formations with classical patterns that would form
mm.
at these particular areas. So if you could just recap on it, but I didn't want to interrupt what you're saying about the
Okay.
USGPY because this is currently vital at this point, right? So you can continue.
Okay. All right. So let me just go through this ebook. Okay. So two conditions, right, to pull the Fibo. If the market is in a downtrend, if the market is in a rally, you pull Fibo from the low to in terms of Fibonacci levels. Okay. These levels, obviously, we said you need to enter them on your charts. They are not there. You need to add those levels. Okay. But the patterns that you are more likely to see are your Quasimodo. These are your head and shoulder. These are your double tree. Your 516 Fibonacci level. That is where you'll see these setting up in terms of your Fibonacci level. These are the patterns, chart patterns we are more likely to see. Okay. And these levels, obviously, they're going to be formed in your bullish engulfing, in your bearish engulfing, if you look towards the left. Okay. And they are the best to trade, especially if the zone is fresh. A fresh zone is a zone where the price is still touching it for the first time. Okay. If the price has touched a level for more than two times, three times, just know there are no longer many orders in that level. So chances are it will not hold. Okay, because if you are selling something, you've been going to the same place, selling it. Chances are people are not interested in buying it because they already have what you are selling. So, but if it's the first time coming back to the place, chances are people say, you're here last time, we didn't get to buy. Please, we want to buy right now. We are ready to buy. We saw the guys that you sold it to, so want to buy it too. So that is what I mean by a fresh zone. Okay. So the way we plot it, you can see here, that's as a supply zone, the price drop, and then you can see on those levels, that is where you see you up. This is how you definitely will plot in terms of you from the low to the high, because why? The trend or the price is moving up. So you took a Fibonacci from the level, from the low to the high. Okay, it's very important that you note those two. Okay, and okay, I think we just do this. And I think if you understand this part, that 5 and 16, 5 to 16. Those are the level. You see a Quasimodo, head and shoulder, double top, triple top. And let's just go over and just go over examples. Let's just go over examples. Okay. Like I said, this year has been on the uptrend. So people believe this is gonna go up forever. Up forever, but it's not. Okay. So the price is coming back to this level. Okay, the price and its touch. And you can see that touch. Remember, I said the bank traders are likely to place trades when there's influx of trades going opposing direction. So there was a drop. So this was a nice trade. Okay, why? Because a lot of traders believe this market would go up forever, but suddenly then there was a just drop here. Nice one. Okay. So now we go over what we're using the Fibonacci for. Okay. Okay. Delete everything. Okay, just let me know if you've managed, you are winning in terms of the plotting, putting those levels up. Okay. Okay, so now we're gonna mark. See this here. This here is a rally, and then this here is our base. Okay, so after this base, then there was a drop. Remember, some traders they saw this, and they said the price chance is not gonna go above this. And you can see there were some candles that actually showing the signs that this is gonna drop, and then it went above, and then this was a base, and then it dropped again. Okay. So, and then after this, like I said, the first trade of a sell is one of the big trade that the bank traders will place. They place their biggest trade first. Okay. So this was a rally base and then a drop. Okay. And then suddenly there was this continuation of a drop over and over. And if you can look left, you can see this is a level of what people call it support, and the price just broke even below that touch, come back, okay? So now the price has been dropping. So what you want to do, we want to draw a Fibonacci. So we draw it from the high towards this low level, okay? And if you look left again at this level between 61 and 50 level, if you look left, you can see these are some of the important areas. But what I want to take notes is this candle. Okay, these candles are opposing the momentum of a sell. So black candles, price is dropping. And these candles are opposing momentum. If you look left, you can see this was previous, we can call it a demand, we can call it support, but this level, the price broke above this level. And you can see when people saw this and they saw that, they were like, you know what? This market is not gonna go further, it's gonna go up, but it just went straight down. So some traders, so this is a drop and then a base and then a drop. Okay. When I see this momentum like this, I really always um, know that this here is consolidation, and then there's this candle here. More likely, the market is going to react to this candle. Okay, it's going to react to this candle because if you can zoom into the smaller time frame, you can see this is like a bullish movement. Okay, so chances are this can happen. Okay, this can happen. You can see I'm drawing my M or my double top where between the 50 and the 61 level, okay, in terms of the Fibonacci, okay? And then the price comes back to this area. So this area is my demand level. So in this area, chances are the market can form what? Whether it can form something like a head and shoulder, something like this, head and shoulder pattern in these levels. Okay. And then the price can shoot up. The reason I'm saying shoots up is it needs to go above these areas because why? A lot of traders have got their sell position, their stop losses, firstly, and then they've got their pending orders around these zones. Okay, so around 61, 5, 7.8, these are the level where the price more likely to form head and shoulder, quasimodo, and all of that. Okay. Okay, you have a question. Um, we can consider it. Yeah, more likely we can consider more like a swap zone. Okay, but we need a confirmation of it. Okay, so we can consider this as if it's a swap zone, but we need the price to come to the zone. We need the price to come here. Then we know that actually this is a swap zone. But for now, because this was a rally base drop, and then this was a drop, and then a base, and then a drop. And then obviously at this level, there was that going on there. But if this price of USD JPY, we see another movement here somewhere there, okay, we will consider it. If the price come back here, we will take this level as a swap zone, okay? So where there was now a demand is just turned into a supply, okay? So that's my expectation. I'm expecting the yen, the USD JPY to come to this level to have some sort of reaction, but a nice reaction will be there between the 50 and the 61 level. And the nice reaction will also be here between 61.8 and 5. So that is where you more like to see your head and shoulder or anything like that. And that is where you're more likely to look for a buy. And then the price, chances I can call back to this level where there was a big sell position. Okay. Let's look for different pairs. I think we've been watching these pairs for some time now. Obviously, if you were in our session earlier and you've been buying gold, you're probably in profit right now. Yeah, because the entry was here. You probably made some few pips on gold, 150 pips. Okay. So you can see even here, the price, this level, drop, come back, retracement, and you can see these are big orders, big movement. Okay, let's look for something else, you know. Yeah, let's look for something else. What else can we check out in the market? What is going on with AUD USD? Whoa, okay. Oh, there were some jobs coming through in terms of. Okay, we look at that. Yeah, I think I remember posting about this. And you can see if you, because almost I like marking levels where the price actually made a reaction. Okay, so these levels, you can see the price touching this level and then starting level. I think I think I did share the analysis on this. Okay. I want you to check. The price was moving. Suddenly there was this big movement to the upwards. And then the price here, before this bullish candle was formed, before this bullish candle was formed, this bullish candle, this one, there was this base here. The price broke above, came back, came back to the similar level, and then still bullish movement, and the price dropped, spike to the similar level. There is original movement came back. The original bullish started here. Price moved, and then come back here, and you can see another bullish movement. So even the news, the fundamentals that are released are in line with the chart. If you can just learn to spot the zone or even understand them. Let's do this in terms of the bigger time frame. Okay. You can see it's clear, it's very clear on the bigger time frame. I like this because now you can see it's okay now. This level that we marked was indeed check. This level was what people may call it resistance, but because the price has touched now, this level is now becoming what? Your demand zone or your support level from the upward to this level. Because the price with this one bullish candle broke above, come back retest. But what we want to see now is if we take the Fibonacci, okay, let me just change this to a line chart. Okay, I want to change this to a line chart. We're going to take a Fibonacci and just mark this. So we're going to take that to that level with the Fibonacci. And we're going to mark our 50 and 60 level. So we'll take all the way. And you can see the 50 and 61 level. What is happening there? Let's change this into normal charts. You can see the price. And if you go and zoom in into this, you can see that this low is actually what? A bullish engulfing. And before that bullish engulfing, this spike, what is the purpose of this spike? What is the purpose of that spike? You can answer in the chat box. What is the purpose of this spike? Remember, this was a huge candle going down before it closed here. This was a huge candle. What is the purpose of this spike? If you know the answer on the chat box, hit the stops. Yeah. Hitting the stop losses of traders. Number two, activating pending orders of some of the breakout traders. It's also forcing other traders to enter sell position, meaning trade in the wrong direction. That is another purpose of that spike. If you can get that, you'll be the master trader. Okay. All right. So in terms of this, it was expected in terms of the charts analysis. Okay, you requested that we go through the decks. Okay. All these markets are doing one and the same thing. Okay. So we're gonna take this here and we're gonna take that. Still for this. Okay. So the 50 and the 60 level is this level because we're just taking a bigger picture on this. Okay. And this was a huge rally. And then suddenly there was a drop. Okay. Suddenly there was a drop. And that drop came back to the 50 level, almost to the 50 level. And obviously there was a spike here, and this spike exactly touched just on the demand zone. Okay, the price moved up, but 1, 2, 3 towards the downside, expecting the price to react one more time towards these levels. Okay, so the price to continue to drop, and I'm expecting it to come back towards this level here. Okay, so this year, an aggressive move towards the upside before it drops. Why? We need orders in the opposing direction. The price has been dropping. Suddenly, there is bullish movement to the upside, and the slowing down momentum shows chances are we want to see a huge candle and then drop. Why this huge candle? So trade